Hello, everyone, and welcome to another interview here on Coin Bureau Clips. And today I'm going to be speaking with Taran, who is the founder and CEO of Stix. That's STIX. It's a platform for trading digital asset secondaries. So, Taran, welcome to the channel.
Thank you for having me, Nick.
Right, guys. So we got a lot of exciting alpha to cover today about what's going on in the OTC market. But before we dive right into that, let's first obviously got to say that everything that's said in this interview is not financial advice. And please consult your financial advisor before making any moves in the crypto market or indeed investing in any assets for that matter. So, Taran, I want to jump straight in with the first question, because obviously our Coin Bureau viewers, most of them may not have dealt with the OTC markets. They obviously hear about the OTC markets covered on news sites and everything, and they hear that people trade a lot of crypto within the OTC markets. But obviously, the OTC markets is a massive market itself, right? Everything from block trades to lock tokens to SAFTs, to even equities. So, in simplest terms for our viewers, can you explain exactly what is the OTC market, who trades within it, the buyers and the sellers, and and how do you see how has it evolved over the past few years?
Sure. Hello, everyone. I think what would be useful is if we cover exactly how these companies get funded in the first place, because a lot of the times, various crypto investors, all they see is coins on an exchange, and they know that there is some technology behind, each coin, but there is years of research and development that usually goes into, the higher quality projects, right? Especially if they're building something very high tech, something very innovative and new, and these teams need money to actually go away and build this. Oftentimes, they need millions of dollars of spending money every single year, and the way they obtain this money is through venture financing, right? So, let's say a crypto founder has an idea, he has to go and build it, and he needs money to do so. So he would go away, pitch it to venture investors. These venture investors, who usually have a lot of money, they are looking out for opportunities to invest, and the projects get funded. Right now, once you look at it through the eyes of the venture investor is a trader as well, right? By that I mean he has to enter the investment at some point, and he also has to exit at some point, right? Historically, venture funds have raised, I think, over $100 billion since just 2019, right? And this much money, I would say probably like three quarters of that has already flown into crypto venture projects. Um, you know, Back in the day when Ethereum launched, Ethereum was publicly funded. But more recent, infrastructure projects, I don't know, Sui, Arbitrum, Optimism, Layer Zero, all of these have raised hundreds of millions of dollars each to build their businesses, build their technology, actually work on their go-to market and so on. Now, how do venture investors make money? They usually, attempt to enter these projects at a reasonable valuation, and they are locked up for, X number of years, right? Say, the developer I just spoke about, he wants to raise, and he wants to raise from venture investors. The venture investor would then be locked up for up to, the average is usually a 1 year cliff unlock, followed by, something like a 2 or 3 year linear vesting. All this means is that the venture investor has to wait 1 year after the TGE of a project to get access to any of his tokens, and then he sees monthly unlocks for a certain period of time. Obviously, this changes project to project, but the usual case is the venture investor waits until he is liquid, and then if he wants to sell, he deposits the coins on an exchange, and he gets liquidity on his position. Right? Either it could be a markup or it could be a markdown. Oftentimes, it is a markdown. By that I mean, most venture investments end up in a loss. It is like the casino where you fund 100 different projects, you hope 10 of them make you money, and so it makes it worth it. Now, on the other hand, oftentimes venture investors have to sit on their investments for years before the tokens could go TGE. Let's take an example: Layer Zero, right? Layer Zero raised money in 2020 and then raised money in 2021. I think they raised a couple $100 million in 2021 from like FTX, Tiger Global, and Sequoia. Right, that was a very large round they did, but they only launched a token like a couple months ago in 2024. So there was 3 to 4 years between when venture investors funded the project and the TG actually happened. And it will be another 12 months from the TGE until when they can actually access their tokens. But, the early investors are usually sat on very large profits, right? Let's say the first round of Layer Zero was at a 100 million FTV valuation. Today's price of Layer Zero, I think it's 5 billion, somewhere around there, right? So the early investors, 4 billion. The early investors are on a 40x, so he's 40x his money. Now he's got two options. Historically, he could either wait for the next 3 years until he gets his tokens and sell, or he could approach us. Now, what do we do at Stix? We allow early investors and also some team members to sell over the counter to buyers before they are fully vested, right? So we allow early liquidity for these positions where these sellers don't have to sit on their tokens for X period of time. And usually, the buyers are either, people who are bullish on the project, right? Or trading firms, market makers, or whales, right? It could be large venture funds, could be, people with a lot of money who think they're entering at a good price. And these block trades for tokens which are locked over, X number of years, usually trade at massive discounts to current market price, right? Layer Zero is currently trading at 4 billion. The fair value, $4 per token, the fair value OTC for Layer Zero is 50% below that, right? So investors get in 50% below spot price. Yes, they are not liquid for 4 years or 3 years or whatever the vesting period could be, but they end up getting in at a reasonable discount and immediately are sat on paper profits. So our trading platform allows these trades to happen. And we are one of the first of its kind to trade these at scale. We trade a lot of volume every single month, and we've been live for about 18 months now. But yeah, that's pretty much what we do at Stix.
That's great, man. So coming back to this question around the the venture funds trying to get liquidity, right? I mean, so obviously if they're marking up, they mark P&L, right? Can they mark P&L on unrealized positions? So basically the price of their locked tokens, they can mark that. Would that be their performance includes that, right?
There is a lot of politics in the venture industry. I think what we should first understand is the dynamic of the venture industry. How do these VC funds even end up with so much money, right? It's not the founder's own money. They usually go to the market and pitch to limited partners, the LPs in these venture funds, who give them money to invest, right? So you can think of VCs as, for lack of a better word, commission agents, right? Because they make a performance fee on the investments they make, and usually they only get paid the performance fee if the LP makes a profit, right? Now, in return, there are a lot of disclosures the VC fund has to make to the LPs on how the money is being put to use. There are a lot of regulated and unregulated structures in which these VC funds are set up. And oftentimes the LPs are people who don't understand crypto that well, right? They want exposure to the industry. They want exposure to high value seed deals, and they think the manager is good, but they don't know how crypto works. So oftentimes you see, venture funds mark these positions at spot value, even though they are 4 years out from fully vesting their positions. But in reality, the real value is, whatever the pricing data is in the OTC market. That's the fair value.
Yeah, no, that makes sense. So in sense that the LPs themselves, they don't necessarily, the concept of vesting out and realizing those gains is something that they may not be fully adept at. And as a result, VCs need to get liquidity. Potentially also it's a situation where, a bird in the hand is worth two in the bush, right? If you've been an early VC in a massive project like this, it's good to get the liquidity because there are other opportunities to multiply the ROI on those realized positions, or just, take a discount on the market value of some high FTV project right now, and you can then go and invest in other new startups and other new crypto projects where you can get much higher ROI. So definitely I can see why the VCs would have a need for this.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am Gigadick, the dude with the biggest P&L in all of crypto.
Bro, say what? My P&L is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm gonna be rocking a super yacht while you're still stuck in traffic, bro. The Bro Crypto podcast is sponsored by the Coin Bureau deals page. If you're looking for trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro.
And then coming back to the buyers, so you said these buyers are motivated by a longer term view on the project, in terms of potentially whales, potentially like fundamental investors. But you said the hedge funds or market makers. So why would a market maker want to take a locked position in a token?
There's a few reasons. Even the market maker could be, long-term bullish, but usually not, right? There are some very smart trades you can do in the OTC market at the current moment in time, right? These markets are very cyclical. Let me give you an example, right? Early last year, most of the tokens we were trading were pre-launch. Celestia, Sui, Aptos, Arbitrum, Optimism, Starknet, ZK Sync, Laser. There were at least, I would say, 4 dozen, about 50 really high quality projects, each of them who had raised 50 million plus, who had early investors sat on huge markups, and the tokens hadn't really launched yet. So the only way to gain exposure to these tokens was to trade OTC, right? Say you want to, for now, right now, if you want to buy Monad, you can't buy on Liquid because the token hasn't TG'd. You need to go and either approach Monad to invest directly into the company, or you have to buy OTC, right? So these are very cyclical businesses where, you have a group of tokens that haven't launched, they only can be traded in OTC. But when the tokens have launched, which is what currently is the case, a lot of the times these tokens end up on the best exchanges, the Bybit, the OKXs, the Binances, and so on. And oftentimes they also have perpetual futures, right? So there is a basis trade out there in the market where the buyer can become delta neutral on a lot of these OTC purchases. Let me explain what that actually means, right? Let's say there is a seller with $3 million of ABC coin, and he wants to sell it 67% below spot value at 1 million, right? The buyer can do a bunch of analysis on this altcoin, go away, look at the futures. If the futures generally have a positive funding rate, that means the buyer, if he goes away and shorts the coin, he would actually be paid the funding rate, to short, because basically supply and demand curves, the way they work is if there are more people wanting to long it, the interest rates are positive, which is usually the case in good market conditions for altcoins, right? So what the buyer could do is buy the position 67% down. He's okay to hold it for 4 years, but then he can go away and fully hedge his exposure on perpetual futures. So he'll buy the 3 million position for 1 million. He can go away and open a $3 million short, and then he is directionally neutral, and he's crystallized a 3x gain, right? Because he's got 3 million of long exposure, he's got 3 million of short exposure, right? And then more often than not, he could be also eating staking rewards for the locked tokens. He could also be eating the funding rate payouts. It becomes very tricky to manage these shorts, but that's what the market makers are good at. Right?
Yeah,
they're really managing these
short like this where you don't have liquid tokens. It's quite difficult. That is interesting, and I think I recall from our conversation last week that especially in the recent fall in altcoins, because obviously you shorten it, right? These guys could make back the capital they invested in the locked tokens. So essentially, now that they've made that back on the shorts, when the tokens are released, it's money for jam. That's basically like a free roll.
Worldcoin was a good example, right? Early this year, all across. I bought Worldcoin Q4 last year or early this year. I can't remember exactly when. It was a good return, right? I bought it like $2.50 or whatever. It ran up to $11, which in terms of FTV was 110 billion dollar FTV, which is more than like some oil companies or like some major tech companies. And not many people even knew what Worldcoin does, but it had a very small float. Now, there was a trade in the market back then where, there was a certain seller of Worldcoin, of a lot of Worldcoin, OTC, at above 90% or 80 to 90% discount to the market, depending on where you ended up getting in. So technically, you could get exposure to Worldcoin at that price, 10 billion FTV. You could then, either open the shorts then and manage the shorts, or wait for conditions to worsen, right? March, if you remember Worldcoin in March, you used to have days where you could just run up, short squeeze 20% within a day because AI was extremely hot. All AI coins were running back then. But the people who actually shorted Worldcoin made a lot of money, right? Because Worldcoin, I need to check again, but I think after I checked, it's back at $1. Yeah, it's $1.64 as of today, right? So it's down over 90%, or I think 80% from its all-time highs, 85% from its all-time highs. So the buyers who ended up hedging their positions have made more than their principal back just by shorting it.
For sure.
Right?
And now they get the principal that's going to come out when it's unlocked.
Funding rates were very negative for Worldcoin for a while, I think. Yeah. So I don't know the exact numbers. So they must have paid a lot of money to short, but it doesn't matter because they made their principal back. And now they can actually safely close their shorts because they've made their money back. Now it's free money, right?
Yeah.
Whenever they get the Worldcoin token in the future, it's going to be free money. Yeah. Whatever they get is free. So they've already made their money by, playing this basis trade on Worldcoin. Now that Worldcoin is one of like hundreds of alts in which these trades. So there are a lot of these trades.
It's fascinating. And I mean, obviously, you're now speaking about, you've obviously talked about one. That leads me on to my next question, right? And that's exactly what is on the market right now. What are you seeing in terms of which tokens are being traded OTC? If you can talk about like potential discounts, volumes, interest, and potentially also like Alpha, where's the undervalued plays right now? Interested to get your take on that.
Sure. So right now, people think, the OTC market was hotter in, Q1 and Q2 than it is now. It's the opposite case. It's hotter now than when the market was extremely frothy, because you have to look on the other side. The buyers are extremely smart, right? They're very, very smart individuals. And, they knew the markets were very frothy because OTC was trading at massive discounts to spot price. So they wanted the price to come down a little bit, and most alts are down 60 to 80%.
Yeah.
Right. So it was a smart move. But now, we're seeing a lot of people actually deploying into a lot of high quality infrastructure projects. Let me give you some examples of recent trades we've done. Ionet, Ether. There's been, you look at the layer twos, they're down massively. I think Starknet / RAM was 22 billion FTV. It's at 3.8 billion FTV.
People actually bid in that, like Starknet now in the OTC.
Because it's not bad, right? Because there's no cliff. You don't have to sit on any cliff period. You'll probably get tokens every month for I think the next 3 or 4 years, and you get in 50% discount to the current price. We have not traded any Starknet recently. We were going to last year, but if there is a seller, it'd probably be a good buy, because you're getting into a layer 2 with lots of proprietary tech at a pretty decent valuation. But then there's also other layer 2s and alt layer 1s, which are very interesting. Arbitrum, there's Optimism, there's Ton. Ton has an OTC deal ongoing at the moment. It's probably one of the most traded tokens in the OTC market this year.
I heard they were trading even last year. They were trading OTC.
It's been trading since Q3, Q4 OTC. Buyers have made a lot of money. I think long term, I'm very, very, very bullish Ton. It's a different conversation, but I really like Ton. And short term, with Pavel being arrested, the token's taken a beating. Yeah. Avalanche has been probably one of the top 5 most traded coins of this year as well. Earlier this year,
Avalanche is still vesting out.
No, but there is a certain OTC
locked. It's no vest, but they're just buying them locked up for a certain period of time. OTC.
Yeah. With them. I'll talk about something in a little bit about treasuries, but I think a few more very interesting trades in the market would also be, some DeFi protocols on Ethereum. Now, ETH Bitcoin is at range lows. ETH sentiment is probably like the lowest it's been since, I don't know, since a while. Like people generally have a hatred.
With bull post up there, right? His
Yeah, with his bull post, with his AI generated bull post.
Bro.
Yeah. But end of the day, I'm certainly no expert, but I think like, ETH as a chain is a very good store of value. If you look at just TVL, right? I think each still has like 100 billion plus in TVL, right? Last cycle, Aave went up to 50 billion in TVL, right? So ETH is still the place for DeFi, I think. And so there might be some really good trades on the DeFi side on ETH, especially with, eigenlayer sentiment is at all-time low at the moment. And certain related coins, EtherFi, Athena, these tokens have crashed like 70-80% as well. I think long term, EtherFi is making a lot of money every year in revenue and fees. Athena, is a very sort of novel protocol with, tokenizing the basis trade on ETH. There's still value, and it's USDE has survived it really well, right? It's gone through a lot of stress testing the last few months.
Yeah, especially when ETH funding rates went negative, and when people were concerned that people were mid-curve in it, they were worried about if it went negative. Athena, what about, okay, so on the layer one side, so the Aptoses, the Suis, those kind of, you seen OTC trading in those?
Sui went through like a month of very high sentiment. You probably saw it. Everyone on Twitter was posting Sui. I don't know exactly what happened. A friend of mine is a Series B investor. Sui is one of those coins where, like, it's still trading at a pretty good FTV for the investors, right? Last round, investors got in at, I think, 3 billion FTV. It's trading at 9, and they're unlocking every month now. So they're still set on paper 3x.
Yeah, I mean, Sui is definitely an interesting project. We covered it just last week, and I think it's really one of those exciting. I think on an alt layer one game, it has strong potential to challenge Solana. Of course, many people talk about Aptos as well. I know we had Arthur Hayes on the channel about 2-3 weeks ago. He's a big Aptos bull, but obviously they're very similar. So people sometimes try to if you're bullish on the move narrative, I think you potentially focus on having one of your move bags, and then it's also movement as well, which I know is also a trade which you've also invested in. Who's move based programming like a Solana based EVM, right? Move based EVM
on ETH.
Yeah, in ETH. Yeah, so move based EVM on ETH. So okay, and then what about any other projects that are trading now that you think have value? I know that you said on the Cosmos side. So obviously you said you're bullish on TIA. You like TIA, but obviously that's over the past on the market, at least spot price.
So TIA we've had deep history with. TIA is one of those coins that has traded a lot OTC. All the way from, I think I first started trading it October 22. Right, just before FTX collapse. They had just raised a $1 billion FTV round. It was not as hot, but I think people were attracted to the modular narrative. They were like, okay, modular monolithic, the conversation is going to continue for a while. TIA might get a lot of attention. So, I bought TIA at 75 cents pre-launch. It was a pretty good trade for me. We traded it all the way from $1 to $3.50, which is 1 billion to 3.5 billion FTV. Pre-launch, and then post-launch we've traded a bunch, at I think average like 60% discount to the market. But now is a pretty interesting time to look at TIA. The reason is October you got a bunch of unlocks coming, right? A lot. I think like 20% of the FTV I think unlocks or something like that. So it could be interesting to see. The cost basis of early investors was 10 million FTV. So early investors are sat on like a 500x at the moment, right? They're never going to buy more on the market because they're already concentrated enough. They might just sell more. But Celestia itself is very, very well sort of financed, right? They have 9 figures of cash in the treasury. In terms of the, just most buyers we face, they want to buy locked here, and supply is actually pretty scarce, right? Early investors are probably just gonna hold through the unlock. Some will, obviously there's going to be sellers, and if they are good at market making their coin, we could see something like a bullish unlock. I don't know. It's tough to predict what's going to happen. I have no insider information. Like if you look at Echelon Prime recently, which is that gaming AI project, I think it's doubled in the last week, leading up to its unlocks. Right? It's gone from $4 or $5 to like $8-9. So it touched $10, I think. So you could do a lot of very smart marketing when large unlocks come. Market making, not marketing. Market making when large unlocks come through. So we could see something very special on tier. I'm long tier, but it's not a majority of our portfolio. It's just something interesting I want to watch in October.
I mean, it's like Tia Celestia is like an amazing, like the whole the tech is amazing, right? Obviously, the concept of the new novel idea of a modular blockchain is amazing, but it's like the problem is usability in terms of like adoption, right? I mean, they need to get people utilizing, their blocks, right, and demanding to use their blocks right now, and it's like. That's the thing. It's not necessarily demand from investors, more demand from actual people to utilize their data availability, system, servicing. So that's, I think, mainly the issue.
There's also, end of the day, I don't want to say it, but it is kind of true where the token ends up becoming a project's main product, right? Let me explain a bit further. The reason why I say that is Celestia has nothing the user is more like a B2B company. If you think about it, right? It provides data availability to a lot of different networks. So what do retail generally care about? They care about, okay, if the coin is going to go up or not. With Sui, at least you can use your chain. You can have wallets on the chain, or like Solana, you got wallets, you can trade memes on Solana, you can have NFTs, gaming, and all of that. Celestia, directly you can't. But the token has very good trading volumes. It's on all the major exchanges. It got a lot of spotlight, like in Q4 last year when it ran up to like $22. And it definitely has a lot of attention, right? I think it's one of those alts where there is a lot of attention on the token, which could be a very good thing. I don't know if it's long-term sustainable because investors unlock a third of their positions in October, and there's going to be monthly unlocks up until next October, right?
What are the size of those monthly unlocks?
Sorry?
Is it do you have an idea of the cliff? Obviously, maybe we can.
So let me do some math. It's going to be 5.5% of whatever investors and team had. So like 1% every month, probably, of new supply.
Yeah, and that's
top of my head. I've not checked.
That's going to be difficult. Monthly, that kind of unlock will be difficult. Let's pray that they're probably praying that we have a bit of an alt season by the time.
It's going to be one of those coins though. Like by October next year, most investors are going to be out. It's going to be very high float next year. By 2025. If we're in a bear market, then TIA could be something to be picked up. Right?
Yeah,
could be very interesting to see how it evolves.
What about, speaking of like another Cosmos project there, I think I saw your tweet about it as well. No one is hitting bids for Dymension.
Ooh, Dymension. Okay, Dymension was a very, very interesting project. I only recently went back to it. We did a few trades when it launched OTC. So when it launched at 8 billion, we did trades at like 1 or 1.5 billion, which is a pretty big discount from the market price, which is why like we knew it was very overvalued. They had the airdrop staking thing, which I don't know. I don't think many people made money from it because the token went down like 50% before they realized they're not going to get any more airdrops. But what I think is interesting with Dymension, they only had one venture round that I know of at I think like 50 million FTV a few years ago. And they launched at the peak of attention on modular, right? They launched at like 8 billion valuation, right? Sure, they're down like 80%, right? They're down about 80% now. But if they hadn't launched at the peak, they would have probably launched at 2 to 3 billion. 80% down from there, I don't know. It's like 500 million FTV. So they've anchored themselves at a 3x higher FTV than they would have if they just launched at a different time. Which is why, investors are still, I think, locked up until like early next year. Whenever I don't know what Dymension's TGE date was. So for the next couple of months, if all see a big rally leading up to the election, it could rally up. They have enough money to make the token really well.
Yeah.
So you never know. And a lot of two of my friends were early investors in Dymension, so they are holding, and I don't think they'll be motivated sellers. Could be anything. Again, not financial advice.
Yeah.
I've just spent a few hours looking at it. But yeah.
And coming back to this, you actually mentioned it there in terms of like when the tokens are unlocked and when they launch and all this kind of stuff. Obviously, projects determine the timing of when they want to launch. But I think it's like, in terms of market conditions, obviously an example there when you're launching at the peak, right? Maybe that's not necessarily the best because they anchor that's what the price you're coming out at, that's your FTV, and people anchor their expectations to that. So in terms of when thinking about TGE, when do you think projects should focus on, like, in terms of timing? What's the best timing? Obviously, also when you're launching in the middle of a bear market, that's kind of also difficult because, the sentiment is really low and there's no interest in the token. So if you were to thinking about advising projects about, when to think about when to release a token, what market conditions do you think are favorable for that?
Again, I'm not really an expert on launch timings. I think there's no one size fits all.
Yeah.
I do think there are certain mistakes you can avoid. Like, it's some very, very easy mistakes to avoid. Let's look at Eigenlayer, right? I think the way to have this discussion is by looking at examples. Those that did it really well, those that didn't do it as well. I think Eigenlayer was a very poor launch. They had the lock token for 6 months. US investors were sort of ring fenced out, and people were using Eigenlayer, or lots of the people were using Eigenlayer in anticipation of the airdrop. And they could have launched at the peak of the cycle, I think around March, April. I think that's around the time they did the TGE before the 6 months staking thing, as a fixed 6 months lock thing. Now, that's certainly not the way to launch, I think. Yes, you have to look at regulations, but you also have to look at sentiment and what could damage your project. When you're launching at the scale that Eigenlayer was launching at, there were some silly numbers being thrown around. Like, we did trades OTC at a 10 billion FTV. 10 billion. So, like, I have not traded any coin except for probably like Solana, AVAX, and TON over a 10 billion FTV, but nothing pre-TGE with that much demand, right? We had, I don't know, $500 million in token demand.
What was the already? I remember hearing this as well about, in terms of the the multiples on the people that got in earlier, in terms of they would be able to.
First round was 100 million FTV. Second round was 500 million FTV, and the recent round was 2 billion FTV. So the X is great, right? 100x for the first round investors, amazing. But like, again, I have not seen so much demand. The top 3 pre-TG demanded coins I've ever seen were probably like Eigenlayer first. Second was probably Sui in Q1 last year. Q1 last year, Sui was extremely hot, especially in Asia. Every Asian investor wanted to get their hands on Sui. And then third was Celestia, right? Celestia had a lot of demand. I think now probably Monad. Monad could be, very high demand coin. But Eigenlayer had so much demand for the token, and there wasn't enough supply. Right, early investors didn't want to sell. Right, people were extremely bullish. Even they wouldn't want to sell even at 100x on at 10 billion FTV, which is crazy when you think about it. But they were that bullish. What happened was, as soon as the lock token thing came out, where the token would TGE, but it would not trade on exchanges up until September, and you can't also move your tokens from your wallet.
Exactly. And
that was for US regulations.
You could be on the US, basically, that was restricted nearly half of the world. Like, not even the US, Asia. That's so crazy, yeah.
I think I remember putting like 100 ETH on Rocket Pool to farm some Eigenlayer. But like, anyway, that was not the right way to launch, because what that had a huge impact on the OTC markets, where almost all of the token demand evaporated, right? I think the token is down like 50 to 70% depending on size in the OTC market. And this is pre-TD. I've not seen many projects fall that much in pre-TD, like before the tokens even launched.
That's interesting.
Right?
So how much of this, now this is a good point you raised, because obviously, how much of this is in relation to a botched airdrop campaign? Because obviously we've seen similar ones and examples, ZK Sync, Layer Zero, they've obviously tried to find a way in which to make the airdrop optimal to, avoid Sybils and to try and stop Sybil farmers and reward those people who actually add value to the ecosystem and all that. And we've just seen all of these guys. I don't think any of them have really got done the perfect optimal airdrop campaign that's pleased most people. Now, obviously, we can get into in-depth conversation around the ethics of airdrops and all the airdrop farmers actually Sybils or they add value and all this. But do you think that in the case of Eigenlayer, this negative sentiment was mainly related to the airdrop, the miscommunication around the airdrop, and then the subsequent?
There was a lot of. I think it wasn't miscommunicate. It was also a lot of lack of communication about the airdrop. Right? They didn't want to directly mention the token. I think they dug a bit too deep on the regulatory side because there's a lot of US teams who launched the token and are still functioning within the US, and they're fine. They're perfectly fine. In terms of negative sentiment on Twitter, for sure, people were expecting the token to be live and trading in April, right? And they didn't get their hands on the token, and the token, you need to give your users what they want, which is really the token, right? They really want to make money from the token. They really want to go and trade a lot of volume on this token, and they didn't get what they really wanted when they really wanted. And I mean, in terms of OTC, man, not really. I think it has a sort of secondary effect where the primary effect is negative sentiment on Twitter, right? And then after a few weeks, there's a secondary sentiment in smart money, which is the OTC buyers, where they're like, okay, now if retail attention from Eigenlayer has dropped so much, maybe we shouldn't really go and bid it at city valuations. Maybe we should be a bit smarter. We still want exposure, but we don't want exposure at a city valuation. If you look at on Ava now, I think Eigenlayer is trading at 5 billion or Hyperliquid, right? It's trading at 5 billion FTB now. It's down 50% plus. There's no volume in these perps, but could be a good indicator of where we are in the market cycle. ZK Sync, again, negative sentiment because they butchered their airdrop. Starknet, I don't think many people like Starknet in the first place. But I don't think, if you remember, Sui didn't have an airdrop. Last year, when Sui dropped, Sui didn't have an airdrop. But, I mean, Sui has gone through a lot of sort of, stress tests in terms of how much attention crypto Twitter is giving it. But it's still a pretty good coin. I mean,
I mean, I guess it's kind of like the concept where people feel extremely hard done by if they were expecting a payout of some description by doing certain things, and they don't get it, and then they'll naturally be very, very vocal about it. Whereas if you, like with Sui, because they weren't doing a drop, people are like, okay, well, I found the project interesting, I enjoy the ecosystem, I can interact with it, and they'll feel less hard done by if they'd spent like hundreds of thousands and multiple setups to try and farm stuff. I remember reading on Twitter, I think it was it the Layer Zero? Or no, it was ZK Sync. Some guy farmed like $2 million worth of ZK Sync using some massively crazy setup.
I know the guy.
Tagged them on Twitter when he sold out. It's like, that sounds like a reasonable amount of money, but for him, it spent a lot of time and money to set up the system.
I think he invested like 400K into the ZK Sync system.
Yeah.
Right?
So
which came with a risk, right? He didn't know how much airdrop he would have gotten. He could have done like some small predictions, but he still invested 400,000 into a chain without a token yet. I think like a lot of the times projects themselves don't realize the reason why they're getting so much attention, the reason why they're getting so much TVL or whatever they're getting in their protocol is because people want the airdrop, right? If you don't give them what they want, they will go and remove their stake. So Eigenlayer's stake in terms of the amount of ETH has not really dropped. I think it's dropped in US dollars because ETH has dropped like 30%. I think that's the reason why Eigenlayer's stake has gone down. But sentiment is still low. But on the other hand, stake is still about the same as it was 4 months ago. It's not really grown as much.
Yeah, lots to see. I mean, they've got big expectations for Eigenlayer still. So let's see when they eventually launch. And if
I hope so, I'm a token holder still.
But it's also a bet on ETH, right? So it's kind of like a bet on ETH. So hopefully, ETH can get out of this rut, it's in. So quickly switching gears now, I want to ask you quickly come back to, because obviously you don't just trade OTC tokens, right? You also trade OTC equity for crypto companies.
Yes.
So, what are some of the crypto companies that are currently trading OTC? And, where do you see value?
Yes, sure. Now, the question retail investors should ask is how much money do these exchanges make, or how much money does Tether make? Tether's obviously been a very successful story in crypto, right? I think their profits were obviously in the billions per year because of high interest rates.
They make so it's like they have 30, like 100, 300 employees, and they make more profit than
50 million per employee. I think that was a number.
They make more profit than Goldman Sachs, which has 40,000 something like that. It's ridiculous.
Yeah, so Tether is obviously one of the most profitable businesses of all time. Tether does not have many shareholders.
Yeah.
Right? I've seen one or two blocks in the secondary market for Tether a few months ago. I think in total Tether has like 1,000 shares, and like some people own I think there's some random people that not many people have heard of own like 10, 20% of Tether. But anyway, there are a lot of profitable companies in crypto, right? It's again depends where we are in the cycle, but historically the most profitable companies have been exchanges, right? Binance, OKX, and Bybit, I think each made over $10 billion in profit in 2021. I know those numbers for a fact. There's also like US companies like Kraken, for example. It's an exchange that has not seen that much regulatory pressure. It's still functioning. Coinbase is trading at 50 billion market cap, and Kraken, in the OTC market, is worth around 2 billion, right? So for buyers, who can't buy, the buyer types are private equity investors who want exposure to the industry but can't directly invest in the coins, right? So historically, they've invested in crypto miners in the US public markets. Galaxy's publicly listed. You've got Hut 8. You've got Marathon Digital, with are publicly listed. And so there's also the private equity sector in crypto, which has been, it was very hot in 2021. Then it died down between 2022 and 23, and then in 24 it's sort of taking off again. In 21, Circle I think was meant to IPO, or 22 Circle was meant to IPO. It was doing a SPAC, and the SPAC got cancelled. Now Circle has IPO plans again, right? People are saying Circle may IPO early next year, which could be very good for the industry. And Circle's fair value in secondary is probably about 5 billion. So if you think about it, right, why would buyers buy it at a 5 billion post money valuation? It's the second most used stablecoin. It's the only US friendly stablecoin sort of provider in the US. It's seen a lot of institutional inflows. It has a very strong relationship with Coinbase and other like custodians, ETF providers like BlackRock. The company has basically two ways to go. 3 ways, right? One is get acquired by someone like BlackRock, which it has to be a very big acquisition, otherwise it doesn't make sense. Second, continue operating privately. Or third, try for a IPO again. If they really want to build up like $1 billion balance sheet, they probably need to access the IPO funds. And 5 billion valuation for a company which has 50 billion AUM, which is what Circle does. I think it ends up becoming a very good buy. So yeah, you got the stable coins, you got the exchanges, you've also got service providers next. Companies like Chainalysis that provide like KYC AML software to businesses worldwide. Then you also have companies like Fireblocks, that provide self-custody solutions for institutions with the MPC infrastructure. Fireblocks, has raised over $1 billion in venture funding, right? There's not many companies in crypto that have raised that much. It's probably one of the top 10 venture funded companies in crypto.
Do you think they got plans? They got plans for any sort of public listings?
So Fireblocks is an Israeli company, I think. Last I checked, if they do want to IPO, which they could, they have to restructure their whole company. I think it takes over a year. They have to move to the US.
Yeah, ADR, unless it's an ADR, but yeah, they need to be actually relisted on the Israeli stock exchange. There's not enough liquidity. So, but if they keep on it doesn't necessarily because you can always sell the OT, you can always sell the shares again, the private shares again if it gets
You
to a
can
higher
sell.
valuation. It doesn't happen.
So we've done a few blocks of 5 blocks, a few blocks of 5 blocks. So the last round was valued at 8.5 billion post money, and the company's down over 75% in value. I think rough fair value for 5 blocks is anywhere from like 2.2 to 2.5 billion post money, which could be interesting. 5 blocks as a company, I think, touched like 150 million in analyzed revenues at some point. Even from there, the multiplier is like 15x, which is not that bad for a tech company, which is also crypto.
Yeah.
So a lot of these companies are becoming very attractive now to institutional investors. Last year, when Bitcoin was at 30K, 25K, there was almost no demand, right? Almost none. Some funds were still buying. But now that Bitcoin's established itself like as a geopolitical asset, as an asset that is global, people can self-custody it, use it for payments, a store of value, sort of that narrative. Institutions are looking at it like, okay, we like it. People are acknowledging, Donald Trump's acknowledged the crypto industry. Even the Biden administration now has acknowledged it. So if it becomes mainstream, some of these companies are become unicorns. Some of these companies are going to become, decacorns, some of them centicorns. So, just highlighting, the type of companies which can reach each of these stages. Stablecoins for sure, right? I think stablecoins are, one of the best use cases of crypto.
I think Circle. Like, I mean, if I was to pick up one of those, equity plays and that you're talking about, I think Circle's definitely got to be the player, man. Like, I mean, especially because and also because not just in the US, like, they got all the regulations in the correct in terms of like the Euro stablecoin with MiCA and all that, and so yeah, I mean, and 5 billion is not a bad valuation, right? So
and only if you do the competitive analysis, right? How much is Tether valued? I think Tether might be valued at 50 billion plus easily. Now, right? The secondary I saw last year was at 20. Earlier this year was at 20. So Tether for sure is like 50 to 60 billion in value, probably more. So Circle at 5 is not bad, right? It has half the AUM as Tether.
But it's also like regulatory clarity, right? Because I know Tether, like, I think they're doing a great job on everything, but there's always the concept that Circle is doing everything, trying to go through the regulatory hoops to basically get the required licenses and all that, and that does add value potentially. There's a discount that's maybe applied to operating.
One thing I think before we move on is worth mentioning is secondary prices, especially for crypto equities, are not as reflexive as, for example, Bitcoin's price, right? Bitcoin could be up to 30% in a month, but secondary valuations might not even budge for that month, right? There's usually a lag, right? I've seen that lag now because, most of these companies are still at the same price as they were a year ago. And meanwhile, Bitcoin's more than doubled in price. So, which is why the thesis that some of these are buys now makes sense, because you've given, over a year for Bitcoin to, increase in market cap and, make the returns it has. And now it might be a good time. And Bitcoin's obviously going through, accumulations phase right now, establishing itself at this, 60, 65 mark. So some of these companies have not really budged in valuations, and they're still printing money, right? There's smaller companies which are still printing in a bull market, right? With the meme coin mania, you've got Pump Fund making insane amount of money per day. I know some of the shareholders in Pump, UK team, printing like a shitload of money.
More than more than the entire Ethereum network on some days.
Exactly, which is crazy. And then you also have companies, and then you have companies which you wouldn't think of are printing money. Dex Screener, right? Dex Screener has had 8-figure months in revenue.
Is that because they also launched a competitor to Pump Fund, or is that something else that they charge?
No. That competitor doesn't really make any money for them. There's no volume on there. But it's because of these memes. Each of these memes launching on Pump or Solana has to pay Dex Screener to go on Dex Screener, has to pay Dex Screener for ads, right? you have to pay $300 to update token information on Dex Screener. You have
So
to
it's kind
pay
of like a CMC
$1,000
for
to
CMC. It's kind of like a CMC for meme tokens. Interesting.
exactly. So Dex Screener is printing money. I want exposure to Dex Screener. I want exposure to Phantom, right? Phantom's probably printing money. I don't know how much. I don't know who holds Phantom shares, but I would rather instead of buying like Fireblocks Chainalysis, those are more for institutional investors. Me as a crypto trader who wants to park his money into something safe, I'd want the Dex Screeners. I want the pump funds. I probably want the like the CoinGecko equivalents or the Phantom, the wallet itself, the most used wallet right now in crypto. Those are the companies I would probably want to pick up.
Well, now that if anyone's watching this interview, they know who to reach out to. They want to sell any of their stuff OTC. So just quickly want to move on quickly. We're going to finish up with a few questions because we obviously have a Coin Bureau Club as our insider community, and I posed this to them earlier, saying that I was going to be speaking to someone who's a professional in the OTC markets, and if they had any particular questions they wanted to share, I could ask them. And so one of the questions we got is, what is the general view of your clients? Are most of them looking for quick profits, i.e. low multipliers, or looking for long-term investments with outsized rewards?
Oh, that's a very interesting question. I think it's neither of those. It's for people wanting to have a good risk profile in their investments. That's it. Because secondaries historically, even in the traditional tech sector, have been one of the best ways to allocate capital from a risk return sort of ratio point of view. Right? If you're entering into something which is very well established, is trading at range lows in the liquid markets, and you're entering a further discount from there, and there's a lot of routes to hedge your position, there's a really good chance of making a sort of a low risk, low to high, low to medium return on investment. Now, in terms of what do I think of clients, I think a majority are holders. Right? A majority of the buyers in OTC don't actually hedge. They are holders. They are okay to hold for 5+ years because generally they have a lot of capital to play with, right? And their cost basis is higher than the person who is selling. The person selling usually is not selling for a loss; is usually selling for a profit. But the person buying is buying at a pretty high sort of cost basis, so they want to make their own return, and so they're happy to sit on it as long as it takes, if it's the right move to get to the price they want. And I don't think most people in OTC are not looking for a quick buck. If they wanted to look for a quick buck, they should go away and play with Bitcoin instead, because you can buy now, sell in a week. With OTC, if you buy, it takes you 2 weeks to buy. First of all, the paperwork takes time, and it's a very lengthy sort of process. And if you wanted to sell again, it will take a few weeks. So it's not really for people looking for short-term plays. It's more for long-term plays.
You also have to get the projects, and projects have to approve it, and all this, and
exactly. So there's lots of bureaucracy, lots of admin and paperwork.
It's not as fun. It's definitely nowhere near akin to trading a coin on an exchange.
It's very boring, but a very important market. It's a very boring but important market.
So well-capitalized investors that have legal departments that are willing
like
to
Bitcoin
do
whales.
paperwork.
Our best clients, our most aggressive clients, are Bitcoin and ETH whales. And generally, Bitcoin whales and people who have been around. This is their third or fourth cycle. They sat on like a lot of cash, and they just, they're tired of, they either don't have the deal flow to play like high quality venture, and they're tired of playing liquid. They just want to buy Bitcoin and hold. Once you get to $100 million in personal cash, you really can't, you don't want to lose it, and you still want exposure, and you don't want to sell your Bitcoin, right? They don't want to sell their Bitcoin. They just want to allocate cash into high quality deals where they're not going to lose money, and they see some sort of good upside, and they go in with size. Our average trade size is between 1 and 2.5 million, right? That's our average sweet spot, and it's for people with substantial amounts of money.
Okay, cool, man. And this obviously leads on to the second question then. And this person is asking, how can we buy locked tokens OTC? What are the minimum sizes or requirements?
Yeah, that's a pretty interesting
project. This will be project specific, I assume, but I mean, yeah.
So one thing I like to say is barriers to entry are quite high in OTC, right? Retail generally can't get access to these OTC deals. If they wanted to buy, $5,000 worth or something, they usually know where they can go and gain exposure to these things. Most of our trades, as I said, average between 1 and 2.5 million. Our minimum is usually 250K, depending on project to project. But we are working on something right now which could reduce the barriers. It's not just like a co-investment sort of or SPV investment, but we're planning on giving exposure to a lot of these through something we're building now. We should be announcing that in the next few months. I'll tell you about this afterwards. I don't think I mentioned it to you, Nick, in the time we met, but it could be revolutionary, and it could also give level the playing field for crypto markets generally, right? Where venture investors usually hold a lot of the power, and by the time the token gets in the hands of the retail investor, it's already marked up, a dozenfold for the early investors, and it doesn't become the best play in terms of risk reward. So we want to make the playing field a lot more fairer, and we're working on this right now. And hopefully we can bring this out live and announce it in the next few months.
Excited, man. Yeah, no, I'm keen to hear about it. And once it's announced, we'd love to share that with the community, because I think that is true. I think that there's generally an inequity in investment opportunities. Part of it is just mostly regulation, right? The accredited investor framework that some people, VCs and those who have fallen into the accredited investor bucket have able to get access to these projects and these deals, and similarly on the OTC side. So anything that democratizes the investment of an early stage projects and is something we'd be interested in talking about. So yeah, I'm looking forward to that. So I think that comes to the end of the interview, Taran. Thanks a lot for this, mate. I mean, where can people follow you? You obviously have some cool hot takes on Twitter sometimes. Where else can people follow you and get hold of you and follow your hot alpha?
I'm very easy to find. I am at Taran_SS on Telegram and Twitter. You can DM me anytime. My DMs are open. If you want to learn more about Stix, if you want to play around with our platform, you can sign up on app.stix.co.
We'll link it below as well, guys.
Amazing. Sometimes I post things about pricing for a lot of these OTC deals, what assets we're looking at, what assets we're trading, our market outlook and so on. Like, for example, yesterday, a market maker in Asia, a prop trading firm in Asia posted a research piece about us. I think that is a very good read. I'll send that over to you, Nick.
Yeah,
it was a long form sort of article.
Very interesting. Well, thanks a lot, Taran. Really appreciate it, and hopefully we'll get you on it next time, sometime soon again, where you can tell us more about Stix and some other interesting deals taking place in the OTC markets.
Thanks for having me, Nick.
Cool, man. Cheers. Thanks a lot.
Bye, guys.